Welcome to ATF TV. This is Christine Zhou reporting from London. Now we are joined by experienced bond investor Rajeev De Mello, who joins us from Singapore to talk about emerging market bonds and how they have become increasingly attractive to international investors. Rajeev was formerly the Chief Investment Officer for Bank of Singapore. He headed the Asian fixed income operations of various global asset managers, and now runs his own consultancy firm, Deep Learning Investments. Rajeev, welcome to ATF TV.
Thank you, Christine. Thanks for having me on your show.
Thank you, Rajeev. This week, ATF published your story, EM Bonds Set to Ride the Blue Wave, about the growth of emerging market bonds. So let's start with some background, please. Why are investors now adding emerging market bonds to their portfolios?
Emerging market bonds, have always been attractive for global investors because of their higher yield and the exposure to a growth part of the global economy. More recently, those necessities by global investors have become even more important for them. First of all, on the yield side, in most credit markets, yield has really collapsed. That started with treasuries after the pandemic exploded in March. Treasuries basically went to zero on the front end and very low yields anywhere else. Bunds in Germany had already been below zero. JGBs in Japan also below zero. So credit all over was the only exposure of where investors could get some yield. However, initially after the pandemic, emerging markets were a source of concern because investors didn't really know whether many of the developing nations would have the strength of institutions to cope with the pandemic and to cope with the drop in global demand. So the initial phase was somewhat cautious, with quite a sell-off in emerging market bonds, just like every other asset class, and caution in the rebound. But I think that's changing right now.
And has China's recent economic rebound been a driver here?
China is very important for emerging market economies. It's been, over the last few years, a major source of the destination of exports by a lot of EM economies. Commodity producers export a significant amount of their raw materials and resources to China. And China has also been a source of demand for emerging economies which produce manufacturing goods as well as electronics. So China's V-shaped recovery has been very important for many emerging markets. And the contribution of this sharp V-shaped and now sustained growth has been critical for economies in Asia and in Latin America through the commodity route and in Africa.
Thank you, Rajeev. Our next question. You wrote about the role that the US election has played in these market moves. So what happens if Joe Biden enters the White House?
Well, if Vice President Biden wins the election, it will be important for emerging markets. I see it as a positive for two reasons. One, in terms of foreign policy, I expect less antagonism coming from a Biden administration. Less policy by tweet, as we've heard a lot from the current administration. Probably less surprises, more coordination with allies, less disruption. That'll take out some of the risk premium which emerging market countries have faced. Some of them were in the crossfires, some of them were targeted for various aspects. Think of Mexico, for example. Perhaps foreign policy will be more predictable, and many emerging market countries will benefit from that predictability. So that would be one reason. Another reason is if Joe Biden gets in, and he gets in on a blue wave, with the Senate being carried by the Democrats in addition to the House of Representatives, I do think that in that case, it will have a relatively large fiscal stimulus being passed in the next few months. And that'll be positive for US growth, but it will also be positive for global growth and for growth in emerging market economies. So Biden victory would be positive on both sides. On the second side, it will depend whether the Democrats manage to win the Senate.
Okay. And because of what's happening tomorrow, I do have to ask that question a bit differently. So what happens now if Donald Trump stays in the White House?
A Donald Trump victory will be really the status quo. Still uncertainty for emerging markets. Tensions with China will continue. And, Donald Trump himself has called himself a tariff man. So there could be worries about tariffs as well, which could be, important for many emerging market countries. So that uncertainty will remain. However, Donald Trump will also move towards fiscal stimulus if he has the Senate on his side. And probably that deal, which has been, talked about since August, but quite elusive, would probably be dusted out and implemented as well. So I would expect a fiscal boost, perhaps not as large as the ones the Democrats would implement, but a fiscal boost nevertheless. So uncertainty on the foreign policy side, some support on the economic front. It should be positive for emerging markets, especially if all this happens, this transition, etc., in a smooth way.
The world faced dismal growth in the first half of this year. And as you wrote, rising poverty and frustration over lockdowns have bubbled into major social unrest. The global travel industry will stay stagnant for a while yet, and Asian countries dependent on tourism and on overseas remittance payments will continue to struggle. So what can Asia really expect in 2021?
Yes, countries which depend on tourism will continue to be affected until we have a vaccine which is rolled out more broadly and travelers get confident once again about going back to their favorite tourist destinations. So there are many countries in emerging markets and many countries in Asia which depend on global tourism, and that will take a bit longer than countries which are more focused on exporting manufactured goods or commodities. In terms of remittances are under pressure because a lot of projects have been stalled in the Middle East, in Asia itself. So it'll take a little while for remittances to pick up again. They also depend on global growth. If global growth starts picking up, they will recover, but they will also be probably slower to recover than exports on the manufacturing or commodities sector.
Well, thank you, Rajeev.
Thank you, Christine.
And thank you all for watching. To read Rajeev's story in full and many more stories like them, please make sure to check out asiatimesfinancial.com for the best Asia news on markets, economies, and more. I'm Christine Zhou, reporting for ATF TV from London.